Good morning, everyone. This is our webinar on how NAR is fighting for realtors in Washington. And I'm very pleased to have our guest speaker, Sarah Young, this morning. She's the Director of Real Estate Services and Policy Oversight for NAR in the Washington, D.C. office. She works on federal legislative and regulatory policy for NAR and also serves as the liaison to senior executives at large residential real estate firms, as well as their affiliated mortgage companies. Previously, Sarah covered policy issues for NAR, including FHA mortgage insurance, VA home loans, and rural housing programs, as well as valuation issues. Prior to joining NAR, she worked as a budget analyst for the Fairfax County, Virginia Office of Management and Budget, as a professional staff member for the U.S. House of Representatives Committee on Financial Services. She's a native of Chicago and received her BA from Hamilton College and her master's in public administration from Maxwell School at Syracuse University. Sarah, thank you for taking some time this morning to join us.
Well, thank you for having me, Paul.
We know that NAR's advocacy team has been really busy the last few weeks, doing a lot of work with congressional leaders to support the agents and brokerage firms within our industry regarding COVID-19 and the relief package. Today, what we'd like to do is hear a little bit more and better understand what the package includes and what this could mean for realtors and the real estate community at large. So maybe first, can you explain a little bit about the role that NAR advocacy groups plays during a crisis such as this and the work that you're doing to address this unfolding crisis?
Sure. So I don't know if many of you know, but we actually have two offices at NAR. So we have our large headquarters in Chicago, Illinois, and then actually all of the advocacy team works out of Washington, D.C. So that's where I'm located. And our advocacy team is broken into three groups. We've got our federal industry relations and policy team, which is what I work on. And then we have a group of lobbyists who maintain our relationships with Capitol Hill. And then we also have a group of political directors who work directly with our state and local realtor associations to make sure that all of our efforts are coordinated across the country. So there has been a flurry of legislative activity, as you can imagine, just to make sure that we can effectively respond to COVID-19 and hopefully mitigate some of the economic impact that it's having on our country. And so there have been several relief packages that have been voted on. The latest is probably what you've seen in the news. That's the CARES Act, and that is the Coronavirus Aid, Relief, and Economic Security Act. That was the $2 trillion package that the president just signed into law, and it's probably what you have the most questions about. That came on the heels of the Families First Coronavirus Response Act, and that was mostly dealing with paid sick leave. So we have a lot of information about this on nar.realtor/coronavirus, but I'll try to give you the highlights, and then Paul, if you have any specific questions for me, I'll kind of feel free to jump in or interrupt me at any time. So the CARES Act, there's a few things that I wanted to point out that you're probably going to get asked about. You might have questions yourself, or maybe you're getting asked from your agents and your brokers. But before I jump into that, I wanted to just tell you that everything that we do at NAR in terms of our work on the Hill, we are so committed to making sure that all of these legislative vehicles include benefits for the real estate industry at a large, but specifically independent contractors and small businesses. We know how critical it is that these relief packages are focusing on sort of the variety of ways that our members work. And traditionally, I know independent contractors have been left out of some of these benefits, and we've made sure in these relief packages that that's not the case. And so I'll tell you a little bit about that as we walk through the CARES Act. So you might know these things already. If not, like I said, I'll give you a highlight. A lot of people are really concerned, obviously, about paying the bills. So there are provisions in here for mortgage forbearance. So borrowers of government-backed mortgages, Fannie Mae, Freddie Mac, HUD, VA, and USDA, can now request up to 360-day payment forbearance without proof of hardship. So that's going to be huge for people that have pause in income, cannot, or worried about paying their mortgage. They can ask for forbearance now from their lenders. Owners of multifamily properties who were current on their mortgage payments as of February 1st of this year and have federally insured, assisted, or a supplemental loan may also request forbearance of 30 days due to financial hardship with extensions for up to 90 days. Borrowers, though, who are being given forbearance may not evict or charge late fees to tenants during that forbearance period, so you know. So again, we've got more information on this. We have a whole guide I'll show you on the CARES Act, posted on our website at nar.realtor/coronavirus. So if you want any more specifics about what I'm talking about, make sure that you go there, or I can send it to Paul and he can send you the PDF document. You might have concerns about credit scores. During the crisis, if furnishers provide an accommodation and the customer makes their payment, or if no payment is required because they ask for forbearance, the furnisher must report the customer as current. So this will hopefully help protect people's credit scores. Student loans. It suspends all payment due on federal student loans for 6 months, which will hopefully provide relief. What you're probably going to ask the most questions about are the new SBA loans. So there's 2 provisions within this bill that provide that are enhancing and expanding the SBA loan program. So now we're going to see 2 main vehicles for relief. One is the SBA 7B2 loan program, which is the Economic Injury Disaster Loan Program. And then the other one is the SBA 7A loan program. And both of these loans now are going to be available to businesses with 500 or fewer employees that have been negatively impacted by the crisis. This is a big expansion of this program. Now the SBA has 2 weeks to write regulations to give us more guidance on this program. So some of the questions that you might be asking, we don't know the answers to those questions yet, but we're doing everything we can to provide some FAQs in the interim. So I held up this one document. It's the summary of the act, but we also have FAQs just for realtors. Like, you're probably seeing a lot of information out there right now, guides from the SBA, guides from the Chamber of Commerce. They all say the same thing. High-level information about what these loan programs are and who can qualify. But right now, there's not a whole lot of specific information out there for realtors, and that's what NAR is working on. So between the summary of the act and the FAQ, hopefully we can answer some of your specific realtor questions. In terms of drilling down on casework, how do I apply for this loan? How do I calculate my commission income? That's stuff that we're going to have to work on, and we're committed to using outside counsel to get some of those specific realtor questions answered. So for the EIDL grant program, which is new, the SBA has provided, or the legislation has provided the SBA with an additional $10 billion in funding to provide an emergency advance of up to $10,000, which is forgivable debt to small businesses within 3 days of applying. So that's new. But you can also apply for a loan through this program of up to $2 million. These can be used to pay sick leave to employees, can be used for payroll, used for rent and mortgage payments, debt obligations due to lost revenues, increased costs for chain supply disruptions and materials. The other program, which is the bigger program, is the 7A, and they're calling it the Payroll Protection Program. And again, this is for businesses of 500 employees or fewer, but this also includes sole proprietors and independent contractors. So you're going to want to look through this very carefully. It's providing $349 billion to cover these loans. There's a lot of resources available. You apply for an SBA loan through a lender, and there's going to be some calculations you need to take into consideration. So the loan amount will be 250% of the average salary expenditures for the month per month for the year prior to the loan, up to $10 million. Again, the 7A loan program can be used for payroll. This includes independent contractors, employees who work on commission. This is a big thing that NAR included in this bill, because traditionally you would not see those kinds of benefits for independent contractors. Again, how that commission income is calculated remains to be seen, and every business is going to have to look at their own unique situation, but that is something that we're looking into and we'll hopefully have more guidance for you on. It can also be used for rent and mortgage interest and utilities. Now, the interesting thing about the 7A program is that all or a portion of these loans can be forgivable if the business maintains at least 75% of the average payroll levels as in the previous year. These forgivable amounts will phase out as employer payroll levels drop below that. But that is a huge benefit if you're able to structure it properly. So again, stay tuned. If you have questions, feel free to write it in the chat. Paul, interrupt me at any time. Another thing you've probably heard a lot about in the news right now is some of the tax provisions. So within the next 3 weeks, realtors and their families and their clients, as well as most Americans with incomes below certain thresholds, will receive cash payments from the federal government in the amount of $1,200 per adult, plus $500 for each child under the age of 17. Again, we think, based on what we're seeing in the news, we're expecting these payments to probably go out in the next 3 weeks. So stay tuned on that. Something else that's probably of interest to you, realtors with retirement accounts, including our IRAs, will be able to take early withdrawals of up to $100,000 from these accounts without having to pay the 10% early withdrawal penalty. So that's another place where you can potentially access additional capital if you need it. There were also some technical corrections in this bill. If you are a business that's going to be impacted by the Families First Coronavirus Response Act, there were some technical corrections in the CARES Act to those provisions, putting some limitations on how much paid leave employers have to pay, and also paid leave for rehired employees, and also Emergency Paid Sick Leave Act limitation. So you're going to want to take a look at that as well. That was a lot of information, Paul. Do you have any? I know. Do you have any questions for me, or if you want to take any questions from the group before we move on?
We already have a couple of questions, and okay. I'm thrilled. I was actually going to, that was my next comment. I was going to say, for any of you that have questions, please use the question box on your screen, and we'll try to get through as many of those as we can. The first question was about that PDF and the whole act that you've already put together for the mortgage forbearance topic. And you'll make that available to me, and we will make sure to send that out to everybody who is on the call right now. Hopefully you put it in your email when you were registering. And otherwise, we'll also post it in the leadingre.com /corona-virus space, where we put all of the documentation about this. So we'll make sure to get that out. So Sarah, you can send me that right after. The next question is, does the 500 employee criteria, does that actually, oh, actually, we just got a few questions in here. Hold on. Does the 500 criteria include independent contractors, or is it just statutory employees? And I think the 500 employees, that's actually the maximum. So if you have more agents than that, it does not count. Is that correct?
So the way the language is written is 500 or fewer employees. So that's a good question because it doesn't specify employees / independent contractors. So let me make sure that we clarify that in our guidance to realtors. Because like you said, I mean, there are companies that have over, when you combine employees and independent contractors, that'll push you over.
Yeah, that would be good. My understanding was that it was going on the employee count, not independent contractor, because that was harder to specify, but it'd be great if you could find out, and we'll definitely get back to you. And then you also mentioned EIDL, and that was a few minutes ago, so can you reference that?
Did people have more, want me to specify?
Just to clarify, what it was, an EIDL?
Yeah, so that's an economic injury disaster loan. So the bill expanded two different. One was the EIDL, Economic Injury Disaster Loan Program. The other one is the 7A Payroll Protection Program. And there's some differences to those. You're going to have to think about which one would be better suited to your business. The second one is really focusing more on protecting that payroll so that you can retain employees. And those are the loans that would potentially be forgivable if you maintain a certain percentage of your payroll in the coming year. The economic injury disaster loans, that's another, there's other nuances in that they've been given money to provide a $10,000 grant up front, which could potentially be forgivable as well. But you can apply to loans up to $2 million through that program as well. Again, once you contact your lender and start applying for these loans, that's when I think you would start to determine which would be a better fit for my business at this time.
Mm-hmm. Great. Here's another question. This is from someone, they just started in real estate in January, and so they had no transactions yet. Would they still be able to get unemployment or any financial benefits?
So these programs are going to be administered through the states. And so we can't say for sure how the states will choose to administer the programs. But we're collecting questions similarly to on the SBA side so that we can provide guidance to realtors and their unique situation as independent contractors. So we are going to have a separate, so I showed you this advocacy FAQ, this one. We're going to have a separate one just on unemployment insurance. So I'll send Paul the URL so you can look at that and see if you're, so the question, can you repeat the question, Paul? Because I'm just going to keep track of this.
Yeah, and I can send these to you as well. But it was the question was, if it's someone who just started in real estate in January, so they haven't had a history of transactions yet, would they be able to get unemployment or any financial benefits? And I'm guessing at this point, if they're new to the industry, it's probably going to fall under unemployment. But if you can verify that for us.
Yeah,
Sarah,
I mean,
Sarah's a terrific resource for us, and unfortunately, I've already warned her that we're going to be calling on her on a more frequent basis. But again, this is a very good use of her time because we've assembled all of us together. We can record this, and then we can take care of it in a large group. So hopefully we'll continue to get this.
I can tell you from what we know now, individuals who are, so in the CARES Act, they expanded unemployment benefits to include this pandemic unemployment assistance. And this is unemployment that independent contractors would be eligible to apply for. Right now, what we know, individuals who are eligible for pandemic unemployment assistance are individuals who are independent contractors, self-employed individuals, or those with limited work histories who, one, are not eligible for regular compensation benefits or extended benefits under state or federal law, and two, can self-certify that he or she is able to work, but is unable to work due to COVID-19 impacts and restrictions. And this would include movement restrictions, employment closures, medical diagnoses, quarantines, all due to the coronavirus. Individuals who have the ability to telework with pay or who is receiving paid sick leave or other paid leave benefits would not be eligible to receive pandemic unemployment insurance. So we've been asked, what does it mean to telework with pay? Because we have agents who are teleworking and unable to close any transactions because of the restrictions, so they're really not making any money, even though they are teleworking. So we're going to get some clarification on that as well. But it sounds like if you think you could be eligible, I would start learning as much as you can about the application process so that when states have this program in place, I mean, it can't hurt to try.
And I think just to alleviate the question, one of the things that we want to do is to try to make sure that we find out how those application process work and what the steps for everyone to go through. Because again, I think it's new territory for everybody. This was just passed last week. And so obviously I don't know not getting political, but just thinking of how the government typically operates when you need to renew your driver's license. They may need a day to get this figured out, and so that we can have a streamlined process. Though my assumption, and from what I've heard so far, is the majority of this is going to be done online for obvious reasons. So another question. Oh, please.
Before I forget, I do have a list, Paul, of all the states and links to lenders in those states who do SBA loans, but then also other organizations that help small businesses. So like maybe local chambers or other small business organizations that have expertise in this area. So I can send you that as well.
Terrific. Yeah, anything that Sarah sends, we'll make sure to get out to you. I have another question. This one's, were there any changes to the timelines for 1031 exchanges? And I know that NAR was lobbying for that and just wondering what the results were.
So we have not, they have not given us that flexibility yet. We've asked for it. We've seen during past presidentially declared disasters some flexibility for 1031 like-kind exchanges. So we've asked for similar treatment during the COVID-19 outbreak. So stay tuned. There is going to be another relief package. They're calling it phase 4 of sort of the COVID-19 response. And that would be other policy changes that we're asking for. So we're going to put, excuse me, we're going to put that on the list for sure. Another issue we're working on is remote online notarization. There's only about 23 states that currently allow it. And some of the state minimum standards really are not meeting investor tolerance for these kinds of services. So that's another bill that we're working on that we would ask that lawmakers include in a phase 4 legislative package, relief package for COVID-19.
Great. And again, Ed, just a question for this, maybe somebody who just joined. Yes, the things we're talking about today, NAR has already put a lot of this into FAQs and different documents, and we will make those available to those of you on the call, as well as posting it in leadingre.com/corona-virus, which is our resource of our different members' ideas and videos and all the different things that our members are doing to share their ideas. Another question. So this is again from an individual. So if somebody is going to receive this $1,200 per person, does that have limitations on how much you make per year?
Yes. So I'll find you the threshold. So the tax credits are provided in the amount of $1,200 for single returns and $2,400 for joint returns, plus $500 for each child under the age of 17. And their credits are reduced by 5% in excess of adjusted gross income over these thresholds. So $75,000 for a single return, $150,000 for a joint return, and $112,500 for a head of household return. So to give you an idea of what that would mean, the credits would be fully phased out for income higher than the following amount. $99,000 for a single person with no qualifying child, $198,000 for a couple filing a joint return with no qualifying children, $218,000 for a couple filing a joint return with 2 qualifying children, and $146,500 for a single parent with 1 qualifying child. In all cases, the level of income before the phase out is complete increases by $10,000 per child. So that's a lot of numbers, but again, it's all in our write-up.
Do you have that detail in one of your FAQs, or maybe you can just give me that and we'll post that. The other question is, I'm assuming, but again, you can correct it, that's based on the 2018 tax filing, since 2019 is not happening yet, or hasn't necessarily happened.
So this will be, let's see. It says if the tax return has not been filed for 2019, the 2018 tax return will be the point of reference. If no tax
Okay.
return was filed for either year, rebates can still be sent based on the information on Social Security benefit statements.
Okay, so just to reiterate, because we did have a number of questions on that, yeah, that base is based on 2019 income if you've already filed taxes.
Right.
On 2018 if you haven't, and since we know our tax deadline has now been pushed off until July, I'm sure for many people they'll still be filing or still be using those 2018 numbers. And you said that if there was nothing filed in this year or last year, they're still eligible, but then what was that last caveat?
Rebates can still be sent based on information on Social Security benefit statements.
Okay, so then they would just revert to their whatever they have in Social Security history.
Yeah.
Okay, great.
So it
Well,
sounds
we've covered
like,
a lot. Yeah,
just real quickly, so it sounds like the payments will be sent electronically if any tax refund was sent in such a manner for 2018 or 2019. And there will also be a notice by mail to the last known address that the payment has been made electronically. If not, a paper check will be sent to that address.
Got it. So for anyone that filed their taxes appropriately last year and they had the same current address, if they have the same bank account that refunds were sent to, it would probably go into that bank account. And again, if that's changed, then I'm sure there'll be some sort of filing notice or something that we can make corrections to. But again, this just happened the end of last week. Those are some of the details that still need to be worked out. You've covered so much of it, and I don't want us to take this on too much longer. These webinars we try to do as quickly as we can. We are going to continue to task Sarah to give us all the latest and greatest information as it becomes available. If there are any other questions, the one I had was, is there anything going on with the lending community? Because I know that's another area that you do spend time on.
Yes, so I'm sure you've just heard a ton of rumors about what's happening in terms of loans and overlays. We have a mortgage group that we work with at NAR. They're mortgage companies that are affiliated with some of our large real estate firms, and they've been a great resource of information for us. We're having calls once a week to bounce these ideas off of them. What's going on right now is some of this social distancing and shelter in place responses are weighing on incomes. Therefore, as I said earlier, consumers can take forbearance. So it's making the lending community a little bit nervous, because what has to happen is even though consumers can take forbearance, the servicers of those loans still have to pass those payments on to their investors. And so who's going to pay that money? If we start seeing lots and lots of consumers taking forbearance, that's a lot of money that has to be generated to pass on to these servicers. So to alleviate this problem, we're asking the Federal Reserve and the Federal Housing Finance Agency to use its powers in combination with the Treasury to support these servicers and free up any logjam. And so we sent a letter. We're hoping we'll hear an announcement soon, and I think that's going to go a long way to settle the nerves in the lending community. You also might be hearing stories of lenders stories from lenders that somehow FHA is changing their credit score criteria or stopped lending. This is not true. FHA has not made any changes to credit scoring. We feel that the only changes they've made have actually allowed more flexibility to the lenders. For instance, there's a new mortgagee letter that will allow a verbal verification of employment, which is huge. And then if the verbal written verification is not available, the lender can approve the loan with no verification, but then they have some additional steps that they need to take. And I think lenders are just trying to get comfortable with these new waterfalls, because they know they still have to do their due diligence, or they'll be on the hook for that loan if something goes wrong. And so I think everyone just needs to settle into the new normal and see, and just make sure, like I said, that down the line that those investors are still comfortable buying those loans. And then we'll continue to see capital flow. You might be seeing lenders instituting their own overlays. For instance, we're not seeing a ton of lending right now under certain credit scores. And so that is true. I think if a lender perceives a borrower as being higher risk, they might be a little bit more hesitant to make that loan in this environment. But that has not come from the federal government. That's those lenders making their own determinations about their risk tolerance. Like, for instance, I don't know if you've heard about any appraisal issues. I know there's been appraisers that have been fearful of going in people's homes. So lenders have to make the determination if they're comfortable doing a drive-by appraisal and potentially a desktop appraisal. Now, Fannie Mae and Freddie Mac and FHA, VA, and all the rural loans, they've said that they will tolerate those alternative appraisal options. The challenge is if you could still get a traditional appraisal, that would be their preference. So there's still a waterfall documentation process that the lender has to go through. So if they feel they can't get that traditional appraisal, they just have to document it and then go to the next step in the process. So these things can continue to happen. It's just you can kind of understand what the lending community is having to deal with. The biggest thing being with the servicers being able to pay the investors, even if a homeowner or mortgage holder is not able to pay some of their mortgage payments during this crisis. Another thing I just wanted to point out is that FEMA is also taking steps to be flexible and address the pandemic through its national flood insurance programs. Customers who are experiencing any financial hardships are able to, they're giving a grace period to renew flood insurance policies from 30 to 120 days. So that's also really good news. Did you want to talk at all about some of the shelter in place?
Yes, that was actually our next question. That was my next question too.
I couldn't remember if that was on the list or not.
Yeah,
go ahead.
And for those of you that I'll just repeat it. So, and some of you have already asked this, but what can we expect regarding essential businesses? Because it's right now shelter in place varies from state to state, and essential businesses vary from state to state. So it seems to be a bit of a moving target with what real estate services are being deemed as. So can you talk a little bit about that?
Mm-hmm. So the federal government puts out a guide of critical, essential infrastructure workers. And this guide is to provide information to the states and localities about who you might want to deem as critical workers during an emergency order to address the public health crisis. Some states have chosen to use that guidance verbatim. Other states and localities have decided to adapt that guidance based on their own health crises. Obviously some states are worse off than others right now. So what we've been doing is working with our realtor associations in those states and localities who've been able to appeal to either their governor or their mayor if there's no state order. The state orders have been superseding the local orders, just so you know. But been able to appeal to their governor and say, we really feel like we can safely continue to do business. We think that we're essential to the economy. Please include us in your emergency order. And we actually have seen some success there. There was an order recently in Washington state that was amended to allow real estate brokerages to continue to do business. And that's been great. Now they've put safety measures in place that the real estate community must follow, such as like virtual open houses, only meeting with 1 or 2 people at a time and things of that nature. But Paul, you could provide the link to that Washington amendment just as an example of kind of what's going on in some of these states. One thing to note, the federal guidance that I talked about, which is put out by the Federal Cybersecurity and Infrastructure Security Agency, otherwise known as CISA, C-I-S-A, we were successful in getting them to amend that federal list to include real estate brokerage services. So the new list 2.0 that came out this Saturday now includes our industry as an essential service. So for those states that choose to use the federal guidance verbatim, your businesses should be included. Now, again, there's going to be guidance as to how to do that safely, and you're still going to see some restrictions, but we're making progress, so that's good news.
Great. You know, we had one question about the link that I mentioned. It's leadingre.com/corona-virus. And that's the Leading RE area where we've been putting all the different things that we find. We also share a lot of members have been doing some great idea sharing with different marketing pieces and things like that that they're using with their customers, some videos. And again, it's probably now, we've been doing it for a couple of weeks, so it's probably getting a little out of date. So we'll have to go through and do some updating now that things continue to progress. But we'll also put a lot of this documentation from Sarah into that space. Sarah, we still have a couple more questions here. And thank you. The essential business is a real issue. And I will tell you a couple documents that will be put into that space later today. We just got a couple of really nice pieces from our members who actually have created a marketing piece for their clients to be able to say, this is how you can buy a home in dealing with this situation. And here are the steps that we've gone through to protect you both financially and health-wise and all those. So we'll have those in this space later today as well. Anyway, so back to the question. Is there an age restriction on taking out dollars out of your retirement account without penalty? Is there any, and you mentioned that you may have to go back in your notes, but I know that people can withdraw from their IRA without the 10% penalty. Is there an age restriction on that?
Not that I'm aware of. Let me look. So it says the The 10% extra tax on early withdrawals from IRAs and qualified retirement plans shall not apply to distributions of up to 100,000 related to coronavirus.
Okay.
There's nothing about any age restrictions. It says temporary waiver of required minimum distribution rules for certain retirement plans and accounts. It says the required minimum distribution, which requires people who turned age 70 and a half in 2019 to include a portion of their IRA or other defined contribution retirement account in their income, is waived for 2020. So it looks like you might want to look through, if this is something you're interested in doing, in our summary of the act that I mentioned, this one, there's about a page in here that really outlines sort of the the special rules for withdrawals from retirement funds.
My guesstimate on that, and again, you can certainly verify on your own, but whenever you withdraw from that, they're waiving the 10% penalty. However, that withdrawal now becomes income that you'll have to report because it was deferred income. So it will become taxable income for this year. So if somebody just goes through and maxes out, say, I'm going to take $100,000 out because I don't have the penalty, you can do that, but nonetheless, that $100,000 will now be taxable in your income tax for 2019. That would be my guesstimate at this point. I don't know that that's addressed yet, but we're looking at some of these things as well with our bankers.
Well, so there's a requirement that the amounts be repaid to the retirement plan over 3 years. And then if you decide not to repay, the regular tax on the distribution would be paid over a 3-year period.
Oh, okay, so that's quite advantageous.
Yeah,
okay.
So it's not as bad as it could be.
So it's not that bad. So you could actually take it out now, repay it over 3 years, and then you really have had no penalty at all.
Right.
That's excellent, Sarah. Okay, one more question here we have. The rebates, the $1,200 rebates and things like that, will those be automatic based on previous tax filings, or is there any form that needs to be filled out?
No, the federal government's going to start pushing that out based on what they have in their database.
So it'll be what they have in their records in terms of how you filed, if you filed single or joint, and what you filed, and then it will follow that litany of different amounts that you gave us based on children and all that. And again, we'll post that. So if there are questions.
Yep.
Terrific. Here's a question, and this is from Charlotte, North Carolina. Based on the local order, it's more restrictive and supersedes the state order. Is more being done to connect the local leaders to discuss how important it is to the industry? So again, I think in Charlotte, again, their local laws are being more restrictive to real estate than the statewide. Anything that NAR can do on that, or any suggestions?
So I am aware of the order in North Carolina. I've seen it. It does not include real estate. It's interesting that you're saying that the state order does not supersede. I would maybe look back at that state language. But we've been into, I know that there are members there that have been in touch with their local realtor association. That's going to be your best weapon in terms of appealing to your local leaders or to your governor to ensure that those the real estate services are included. If you want to, please point to the federal guidance too now to show, you know, the administration considers our business as essential. And I think if there's any way that you can show that you can conduct your business safely, you know, maybe look at what the Washington Realtors have done and the guidance that they've sent out and use that as an example. I think the more we can show that we're not just trying to, you know, flagrantly disregard, you know, the importance of the health crisis, the better.
That is an interesting point, though, when the state supersedes local unless the local is more restrictive, and then the state doesn't seem, or locally they don't think the state supersedes it. So that's
right.
That's
right, because we had this issue. Yeah, we had this issue in California where the city of Fresno was more lenient and included real estate services in their order, but the state did not. But the state does supersede local guidance in California, but it's pretty clearly spelled out. So it was real frustrating, obviously.
Yeah, so Charlotte is, North Carolina is the reverse because Charlotte's more restrictive than the state.
Yeah. Right.
Okay.
So they're trying to
let's see.
Yeah.
So I think it sounds like when do you think we will see some of these benefits? When do you think the dollars, and I know you don't have a crystal ball, but is there any discussions around, I know it just happened last week that everything got approved, but any idea when some of these dollars will actually start hitting people in terms of transfers into their checking account with the $1,200 or things like that?
Well, I just saw something from Secretary Mnuchin of Treasury saying they want these out in 3 weeks, cash payment.
Okay.
In terms of the SBA loans, like I said, the SBA has 2 weeks to put out new guidance on the new programs, the new elements to the, so SBA has had these loan programs, but they've expanded eligibility. So they have to put some guidelines around what that means, and they have 2 weeks to do that. So then we should have more information. But that does not preclude you from reaching out to one of these lenders and starting the process. So if this is something you think that you might be interested in, I highly recommend familiarizing yourself with the form online, really thinking about how you might start documenting documenting your hardship to your business. There already are sort of a list of things that you should take into consideration. The U.S. Chamber of Commerce has put out a coronavirus emergency loans, like small business guide and checklist. This is one of the better things I've seen. Again, it's still pretty high level, but if you want to just start really thinking through what you might want to put together, like in here it says, what will lenders be looking for in evaluating eligibilities? Lenders are directed to consider whether the business was in operation before February 15th and had employees for whom they paid salaries and payroll taxes or paid independent contractors. Lenders are going to ask you for a good faith certification that the uncertainty of the current economic conditions make the loan request necessary to support ongoing operations. So anything that you can start to pull together that you think would make your case, I think would be really helpful.
And do you have that electronically that you can share with me as well, that document?
I do.
That'd be great. I know that we have also already inquired with some of our bankers and looked at and they're actually very informed on this. They're because it's a program that already existed. So or at least the basic loan program already existed. And so really the change is what will happen to that loan. And the wording is that in some cases that loan would then be forgiven, at some point in the future. So I think my interpretation is, to date, they're looking that the loans will still be available, and be able to forgiving a loan, there'll be some additional work to do that you'll have to prove that you did abide within the constraints of that. You didn't lay people off, you didn't do the things and all sorts of things. But the loans, most of the bankers already have quite a bit of that information. So you're right. And then they said there's more to come, but I think the 2-week period is about what we heard as well.
And that list that I have of local lenders is pretty comprehensive. So that would be looking at the SBA or the U.S. Chamber of Commerce loan guide, looking at that list and clicking on your state and seeing kind of what kind of resources are available for you would be a really great place to start.
Terrific. Well, I have not had a question in a couple of minutes, and I think you've done a terrific job, Sarah. I know we're going to check back in with you if that's okay, because I know this is just an ongoing shifting challenge. We appreciate everything that NAR is doing in Washington, and I know it's not a huge office, and all of you are working very hard and long hours, and I've heard different reports from all of you. It's really crazy there right now, but we appreciate everything you're doing for the industry, and thanks for sharing your time with us today.
Of course, we want to do anything we can to help you, so please continue to reach out.
Wonderful. And I just received a question. This is recorded and it will be posted probably later this afternoon. But if you logged in with your email, you'll also receive a notification of that. And there'll be some printed handouts that we're receiving from Sarah, and we'll make those available with directions in that email as well. So thank you everybody for joining us today. And again, Sarah, thanks so much.
Of course. Thank you, Paul.